All right, this is the second video for line 6, Social Security, and this is part of my playlist for our 1040 step-by-step. Now, what we're going to be doing in this video is we're building upon the conceptual stuff that we talked about in the first video. So we're now going to take a look and figure out where these numbers are coming from and how to actually calculate them. So we're going to be working through a problem to where we get to actually see how this applies and how much is going to actually be taxed. Now, to start out with this, what we'll do is we're going to take a look at the actual worksheet, and we'll briefly look at the worksheet. Now, the worksheet, the way that they structure the calculations is a little bit different. I'm still going to show you how you do the calculations, but I restructure it a little bit so it makes conceptual sense. We're going to get to the same point. It's just, I think, an easier understanding versus following the way that the IRS calculated it. All right, so let's go ahead and take a look at that worksheet first, and then we'll start getting over to the actual computations. All right, so what we're looking at is the worksheet the IRS provides us for the 1040 as we're dealing with line 6. So what we start out with is we're looking at our 1099, which is going to be our SSA 1099, which will be provided to us. Now we go to box 5 from our 1099, and we're going to enter that into box number 1 on the worksheet. Now, remember when we were talking in the previous video, we said that line 6 is divided into 6A and 6B, and that 6A is the total amount you received? Well, you're going to take line 1 from this worksheet. That's also going to appear on your 1040 line number 6A. So the amount from box 5 is going on, and it's going to appear over on your 1040 line 6A. All right, now after we get through that, you can see the things that we're looking at. 50% is where we start out with our Social Security, so we're only going to include 50% there. You can see from when we were talking before, we're taking lines 1, we're going all the way up, 2B, 3B, 4B, 5B, 7, and 8. So we're calculating all those together. Now remember, when we were talking about 2A, and 2A was interest, but that's tax-exempt interest, and we said, well, that's not initially included, right? And then 3A is going to be our qualified dividends. Well, all of our qualified dividends were already included in B, so we didn't want to double count those, so that's why we're going with B. Same concept for 4 and 5B. So that's what we're looking at. If you need a review, the first video, make sure you go back and take a look at that if you want to understand this conceptually. So that's where we start out with, all right? So we're taking those amounts, and then what we have to do is we start going through. We're going to add line 2A back in here because 2A does get added back as we go through the process, which is our tax-exempt interest, okay? And then we'll start to go through and figure out how much of our Social Security is going to be taxed and those types of issues. And you can see there's several steps in here. I'm not working through the actual worksheet. I'm doing it conceptually. I'm going to do it in an order that'll make more sense to you. We're going to get to the same place, but we're going to do it in a logical manner, and we'll run through some numbers. I'll give you an example, and we're going to actually go ahead and calculate this. So one of the first things that I do is I say, okay, well, what is our provisional income? So let's go ahead and take a look at the formula to figure out provisional income. All right, so now we're looking at the formula for provisional income. And this is where we deviate a little bit from the order that it works in the worksheet, but we're getting to the same place. So what we're dealing with is AGI minus our Social Security. Now, we talked about AGI in the first video, and it pretty much mirrors what they started out with on the worksheet. So we're looking at line 1 or line 1Z specifically, but line 1, which is our W-2 wage. Then we're going to be going through and we're looking at 2B, 3B, 4B, 5B, right? We're going through all those things. 2A was our tax-exempt interest, so that wasn't included in our initial computation. So we have AGI minus our Social Security, so we don't have that yet. So we include that. The next thing we do is we add back line 2A. That's that tax-exempt interest. Now, it wasn't included in our AGI, and the reason it's not included initially in our AGI is because our AGI may be taxed, right? I mean, that's where we're going to taxable income and all the way down. We're working AGI, and we're getting to the taxable amount. Well, we don't want it to be in that tax lane, so we have it on the side. But it is still being used to determine the amount of our Social Security, if any, that is going to be subject to tax. So that's why we're now adding line 2A back and why it wasn't included in AGI. And then what we do is we add half of our Social Security benefits. So you take your entire amount of Social Security benefits, like line 5, times 0.5 for 50% of it, and that's going to give you the Social Security benefits that you're adding into your provisional income. All right, so like I said, we're going to work through here. We have one more table, but then we're going to go through and we're going to work through a comprehensive example. Okay, so now that we know we were taking AGI minus Social Security, and what we were doing is adding back our tax-exempt income from line 2A and 50% of our Social Security benefits to get to our provisional income, what we have to do now is we have to start to figure out, well, how much of our Social Security is going to be taxed. Not what percentage is it being taxed at. Social Security is not taxed at any special percentage. It's not like 0, 15, or 20%. But what happens is your other income will eventually make your Social Security taxable. And it can be taxable up to 50% or up to 85%. And we're going to look at that here in just a moment. Now we're taking our 50% of our Social Security, right? So when we're getting to our provisional income, in order to determine what percentage of our Social Security is going to be taxed. But when we figure out that percentage is going to be applied to our total amount of Social Security, not just the 50%. It goes to the total amount. So the 50% is only being used for us to help determine what percentage we're going to be taxed on our Social Security, or of our Social Security. So let's go ahead and take a look at this. If you're single, head of household, or qualifying surviving spouse, then once you make $25,000 all the way up to $34,000, that $9,000 range, okay, that will be taxed at 50%. Okay, so once your income is between 25 and 34, you're going to be taxed at 50% of your Social Security wages, not the percentage. That, like I said, that's going to be determined at the end. We don't have that special rate. No 0, 15, or 20% special capital gains rates apply. This is going to be taxed at your ordinary rate. Now, once you start making your total income is $34,000 or more, then the amount that falls from $34,000 on up, that amount is going to be putting us at 85% of our Social Security that's going to be taxed. So if you're below $25,000, none of it's going to be taxed. The amount that falls from 25 to 34, that's going to be up to 50%. And then from 34 above is going to be 85%. And you can see we have a different amount for our married filing jointly and for our married filing separately. So let's work through an example so you can see what I actually mean. The numbers are going to help put this all together for you. All right, so here's our example. So at the beginning I have Social Security base threshold that's $25,000 and the upper is $34,000. So we're at $25,000, so below $25,000, not taxed, and we have that $9,000 bracket, which is our base of 25 to 34, and then that's at the 50%, and 34 over gets up to the 85%. So that's the first thing. Now that's what we went over in the last table, but for the facts on this one, Social Security benefits of $20,000, other income of $30,000, no tax-exempt interest. We know we could have easily added back the tax-exempt interest if we wanted, but we're just not using it on this one. All right, you're going to see some arrows. I put those arrows in here so that way it's a little bit easier to identify where things are coming from, since this is pretty math heavy for us. But we're going to follow the steps now, right? So the first thing we're going to do is we've got to take our AGI excluding our Social Security. Okay, so we're using all of our AGI. Now we're provided with that amount here. It told us it's $30,000, so I just took the full $30,000. But otherwise, this is where you're going through. You're taking line 2B, 3B, 4B, right? The whole formula we talked about in the previous video. So we're not going to reteach that in this video for you. But you can refer to it if you need it. So you have $30,000. Then what we do, so that's going to be our AGI minus our Social Security and without line 2A, right? So we're going to then say, okay, what is 1/2 of our Social Security? Well, we had $20,000 of Social Security, which was given to us. 1/2, so we multiply it by 0.5. That's going to give us $10,000. We had nothing on line 2A, so no tax-exempt interest. So we're at 0. So we have 30,000 plus 10 plus 0. That's going to give us 40,000. So provisional income is $40,000. That's pretty big for us. That's what we needed to know, because now we're going to take that provisional income, and what we're going to do is we're going to go look to see, okay, where do we fall on those brackets, right? So the base threshold, and this is from statute, and this is things that hasn't been changed since 1983. It's not index or inflation or anything like that. $25,000. And then the upper threshold was that $34,000. We had that $9,000 bracket from 25 to 34. And then the upper threshold puts us at $34,000. Now, the 25 to 34 bracket, that's at that 50%. And then what we're looking at is the upper bracket is at 85%. So what we need to do is we need to figure out, well, how much of it is going to fall within that 85% area. So if we come down here and we say, all right, we have $40,000 of provisional income, how much of it exceeds the beginning portion of our upper bracket? Our upper bracket was $34,000, and it's put right up there in the fact pattern up there. The upper threshold is $34,000. That, again, that hasn't changed since 1993 when that one was added in, actually. But what you have is that $34,000. So if you take $40,000 minus 34, that gives you $6,000. All right, $6,000 is going to be taxed at 85% statutory. You can see on my, I'm regretting it now, but you can see on my step number 8, I put $85 sign of excess. That should have been a percentage sign. Over in the calculations, I actually have the 0.85, so it's good there. I put dollar versus, so I hit the 4 versus the 5. Anyway, so what we are doing is 85% of the excess. So we go $6,000, which we just calculated, the 40 minus the beginning upper bracket. That gives us $5,100. Okay, so we're going to include $5,100 to be taxed. So that $5,100 so far is set to the side, but that's going on line 6B, because that's going to be added into AGI taxable income, and we're going to eventually pay taxes on that. Then what we do is we say, okay, now let's go take a look at the 50% bracket portion of it, right? Well, $25,000 to $34,000. It's that $9,000 bracket. In this situation, we completely went through all 9,000, right? So we're going to go 9,000 times, that's the 50%, times 0.50. So that equals $4,500. So now all we have to do is subtotal those, the 5,100 plus the 45, that gives us $9,600. Okay, well, here's our last step that we have to do now. We say, when we're looking at Social Security, we're never going to pay 100% taxes on 100% of Social Security. The maximum that we can pay is 85%. So what we do is we're going to take the lower of our $20,000 of Social Security times 85%, that's $17,000. That's the cap that we would have done if we had $20,000, if we were at the 85% for the entire amount. So you'd have to be bringing in quite a bit for that to actually occur. Otherwise, what we do is we're looking at this 5,100 plus the 45, which is 9,600, right? Because we took our step 8 and step 9 together. Well, that step 10 is lower. Our total amount from those two steps was 9,600. That's the amount that we're going to include on line 6B. So now you know how to get 6B. That's all there is to it. It looks scary. Your tax formula, your tax platform is going to go ahead and do all those calculations for you. But it's important to be able to understand it. You know, if you're talking to your parents or if you're collecting Social Security, hey, this is good to understand, so that way you know how much you're actually being taxed on your Social Security, and you can then determine, if I make this amount of money, what's it going to do for my taxes for Social Security income. All right, well, that is it for line 6. We'll go and we'll start looking at line 7 next. If this video was helpful, please make sure you subscribe and follow on for line 7.